Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Thursday, May 2nd, 5:14 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Roundup Daily Market Insight video. State of the market, we're in a mild correction. You can see the trend gauge over here. Good day for leading stocks. So we added the sub arrow under neutral for market leaders. Short term, can't say all five of the major indexes are below the 21, as surprisingly small caps, which have been underperforming for a while, the first of the five to reclaim the 21-day moving average. Is that a sign of a possible shift to small cap outperformance? We don't predict here, but we monitor and report the facts. And the fact is that this is the first one back above. So certainly something we'll take note of. The other four indexes still below their declining 21-day moving average, all five below their declining 50-day moving average. That's our medium-term indicator. All five above the long-term 200-day moving average. Remember, the market never gets into serious trouble, serious drawdowns, unless the indexes start to break the 200-day moving average. So what happened today? Well, with the harsh sell-off into the close yesterday, there was fear of an FOMC hangover, but futures were strong overnight. Before the opened, some negative, or I should say some inflationary wage data came out, but the market didn't blink and opened strongly, up 0.7% on the S&P, 0.9 on the NASDAQ 100, 1% on small caps, but put the high in within the first 5 minutes and promptly rolled over. And everybody at that point saying the sky is falling, the sky is falling. But the market has a funny way of confusing everybody. And it turned tail and rallied for most of the rest of the day, from late morning to the close. A little bit of a pullback into the close, but some solid numbers. Volume light, however, so no follow through day. But after hours, Apple is having a very nice reaction to its earnings report. They announced a huge buyback, upping their dividend. Tim Cook had some optimistic things to say to CNBC, and he's usually not that optimistic. And the net result is that Apple is up after hours, and nicely up from 173 to 185. How much is that? That's pretty good. That's about 7 or 8%, I believe. Let's take a look. I try not to do math in my head. 6.7% after hours, and that is going to spark the indexes because of its heavy weighting. So as of right now, it's 5:17 p.m. Eastern time. The SPY is up 1/3% after hours, and the NASDAQ 100 is up 0.5% after hours. So getting a head start on the return needed for a follow-through day tomorrow. Tomorrow would be day 10 off of the lows. And no predictions, but we would like to see some follow-up for the good action that we saw on leaders today. So here are the final numbers. Our 21 over 21 leaders list up 1.86% on the day, 19 of the 21 positive. The big eight up 1.8%. RG8, this is our 8 growth ETF composite, up 1.5%. So all three of those numbers, what we want out of leading stocks, growth stocks, and the big names. S&P 500 up 0.9, a little bit of a disappointment, equal weighted, only up 0.6. We'd like to see better breadth there. NASDAQ 100 up 1.3, equal weighted up 1.1. Dow up 0.85, mid caps up 1.3, Russell 2000 small caps up 1.1, Global 60/40 up 0.88, both stocks and bonds higher, so rates pulled back a bit. In-house, our flagship portfolio, GROTECTION, up 0.62%, basically in line with what our current adjusted beta is against the S&P. And we're looking to add to that when we get the major indexes properly configured above the short-term, medium-term moving average, and we get some nice action or continued action out of leading stocks. Let's dive right into it. We'll start with the S&P 500. You can see the bounce off of the 5,000 level here. just barely above or right on the 8-day exponential moving average, uh, just below the declining 21-day moving average that has been acting as resistance, and also below the 50-day moving average. But uh, looking to put some sort of a base in here and challenging that 21-day moving average after hours with the pop that we're seeing on the indexes. NASDAQ 100, pretty much the same setup. So after hours, we're at right below 429. The 21-day moving average is at 429.60 as of right now, and it's dropping a little bit a day. So again, we'll be right into that declining 21-day moving average tomorrow. See how we react to that. The Dow Jones Industrial Average, very clearly seeing the declining 21 acting as resistance. Apple is in the Dow though, so that'll benefit from that strength tomorrow, although it's not necessarily one of the higher priced stocks. It does contribute. Mid caps. Mid caps are right on or just below the 21-day moving average. Nice consolidation here for the last 8 sessions, although obviously still below the uptrending 50-day moving average. And the Russell 2000 index, you can see here poking its head back above the 21-day moving average. It was there 4 sessions ago, and then 2 closes below, now 1 back above, and then we look for some follow-through strength and see what happens when it gets into the declining 50-day moving average. The VIX in line on an opposite basis. The VIX is normally down when the market is up, and that's what we saw today. Back below that 15 level, that's where the market has done its best work over the last 6-7 months, when we're below 15 on the VIX. The dollar also pulling back. Japan intervened with the yen, causing the dollar to pull back and the yen to spike. So, and this is good news for stocks if it continues. Now, manipulation isn't normally something that's going to continue, but we'll see what happens if obviously we have to let the market decide on that. But the dollar breaking below the 21-day moving average for the first time in about a month. How did that impact the precious metals? Well, gold down on the day, although closing at the top of the range, below the declining 21, down 1/3%. Gold stocks up, however, reclaiming the 21-day moving average on an undercut and reclaim. And silver also up on the day, up 0.4, finding support at the top of that prior base that it broke out of. Bitcoin had been getting hits recently, looking like it, well, trying to put in the bottom with a nice bounce back up today, up 4.4%. On to bonds. Bond prices mostly higher today, meaning yields pulling back a bit. So people that were concerned about an immediate spike up in yields because of the Fed yesterday didn't get that. Into the declining 21-day moving average, up 0.25%. That's the broad bond index. TLT, the long bond, up 0.4%. That means that you're going to see that the 30-year yield dropped. Actually, no, it was up slightly higher. Remember, this closing an hour earlier didn't mean that yesterday's close was necessarily in sync with a true reflection of the yield. So we did close at the bottom of the range on the day, but slightly up. And again, these are 3 o'clock closes, and that's when bond market closes. TNX down 0.52% on the day. Okay, that's our inter-asset correlation. Let's go to the tail of the tape. A couple of positives here. Bulls, just a mild gain on AAAI. That's a sentiment indicator, and NAAIM. Stochastics back to positive on all 8 of the RG8 and all 5 of the major indexes. So good stuff there. I mentioned unit labor cost, the NFP government jobs report out before the open Friday will be closely watched. Day count from down 2 to up 1, just barely above the 8-day exponential moving average, 3rd day below the 21 on the S&P 500. Expectations, although we're below the 21, I upped it from negative to neutral because of the after hours pop in the index on Apple. See if we get any follow through on that tomorrow. As far as individual sectors go, KWEB, China stocks have been acting very well. Uranium up today, Bitcoin up today as well. KRE add banks to stocks that were up as well also, and oils also up. On the downside, cloud stocks, as a couple of them reported earnings and got hammered. XLB, that's basic materials, and GLD down on the day. Only portfolio changes, we bought back the First Solar slightly higher than where we sold it yesterday, but they confirmed their very nice fundamentals and got a price target upgrade from Goldman Sachs. So we bought that small starter position back. Mild uptick in our exposure from 0.58 to 0.60. Bottom line on the day, no FOMC hangover with the nice green returns, but no follow through day due to light volume. And we'll see what the Apple after hours positive earnings reaction, see how that carries through to the indexes tomorrow. Let's go through the portfolio as well as the 21 over 21, and we'll go in order of positive gain on the day. If we're green flagged here, it means we own it in GROTECTION. We'll start off with Hood, regaining the 21-day moving average. We did get stopped out of that 2 days ago. ALAB, nice undercut and reclaim of the 21-day, up 5.7%. Here's the how much they were up on the day column down here, and then of course also in the upper right. VRT, another one that we own, undercutting and reclaiming the 8-day. Spotify, reclaiming the 21, good action there. NVIDIA challenging right up into the 50-day moving average. CCJ, uranium miner, regaining the 21 after a spin out on its earnings report. Micron, still below the 21, needs to participate. That's a big AI data storage player. SEA, putting in a nice little handle here. United Airlines, bouncing near the 21-day. First Solar, we rebought this, as I said, undercut and reclaim of the 21. GE Vernova, bouncing at the 8-day. Coupang, closing at the top of the range today after testing the bottom of the recent range. Goldman Sachs continues to act well, making new highs. Kava, harsh 2-day pullback, bounced at the 8-day right where it needed to. Restaurant stocks had a good day today. CEG, Constellation, continues to be in a very tight formation right on the 21. Generac, negative reaction yesterday, tried to rally today, but was thwarted at the declining 21-day. GDX, regaining the undercut and reclaim of the 21-day moving average. This is the ETF that represents the broad precious metals and the gold and silver miners. RTX, Raytheon, just going straight flat sideways. I'll show you another defense stock in a second. American Express pulling back, Datadog pulling back, sitting on the moving averages, and FCX copper stock cutting below the 21-day moving average. Earnings, Howmet, this is a HWM, is an aerospace stock that was up 15%, over 15% on the day on 156% average volume, breaking out of a very nice flat base, confirmed by relative strength. And we'll be adding this one to our watch list, and it'll probably replace Raytheon as it's just acting much better than Raytheon. A couple other earnings news. Coin after hours, down a bit, rallied right into the 50-day moving average today. We'll show Apple, up 7% now, 185. So this is going to take it back above the 200-day moving average. Nice, very nice move for Apple. Net falling apart today after earnings, down 13%, and that's going to put it below the 200-day, or right on the it's right on the 200-day moving average after a very nice reaction to its prior earnings report. Couldn't gather any strength and just continued to lag on a relative basis. and now a negative reaction to today's earnings report. Square is up after hours. This was a broken chart, but trying to get back above the 50-day moving average. DraftKings guidance, not a major positive reaction to it, but up 2% after hours, and that'll take it back above the 50-day moving average. You're seeing DraftKings is a symbol of what you're seeing a lot. You know, these stocks have pulled back, these uh, past leaders trying to reclaim their leadership status, pulling back now, trying to start up the right side of their base. The best ones are a lot of what we just shown and are already making new highs or bringing themselves into attractive entry points. And sometimes that's all the market needs is time and information, and you see how it resolves. And as of right now, at least after the terrible close yesterday, we didn't get a follow-up of that today. Next thing we need to see is a reclaim of the 21-day moving average, and for that to hook up and get back above the 50-day moving average, and that coincide with good action from leading stocks, which can outperform the market by a factor of 2 to 3 at a minimum. Those are the types that we'll be looking for with strong fundamentals acting as leaders in their sectors. That's going to wrap it. As always, like to hear from you. The email is don@revereasset.com. Phone's 855-REAL-WEALTH. That's 855-732-5932. Our flagship portfolio is named GROTECTION because it is designed to grow stocks during uptrends. We let stops take us out of the market if the market decides to go sideways, and we get out of the way during downtrends as we did last year during the summer swoon and in 2022. And if you think this approach is right for you, reach out to us. I'll put a 12-point summary of what we do and how we approach the market. You can pause and read it while I wrap up the video. So that'll end things for today, Thursday, May 2nd. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great day.